All right, so let's get started. So today's session, we're going to go over bad news bouncers. And that's kind of a name that I gave them. So I don't know, other traders may call them something else. But basically what it is we're looking for an opportunity on a stock that has had very recent bad news, whatever that news may be. We'll go over that here in a moment, where there seems to be a couple of different things. Number one, there's a trader overreaction. You know, traders tend to overreact on bad news. They tend to panic. And by the way, if anyone was unaware, we have a channel in our Discord group that is dedicated solely to these bad news bouncers. And I list them in there. I think some other people list them in there as well. And I try and list the news that actually made them go down, so you can take a look at that. So sometimes these bad news bouncers, they react in reverse pretty quickly. And we're going to go over several examples today. And all of these examples, well, not all of them weren't in our channel because we kind of started that channel after some of these bad news bouncers. And I think Joe is the one that said, hey, let's make a channel for that so we can, so when I hop on, I can take a look at it because they were doing so well. There was so much money to be made on those that we made our own channel. So some of these won't be in the channel because we didn't have the channel at that time, but we knew they were bad news bouncers and we put it out to everybody. But we do have a channel for that. So what we're looking for is we're looking for certain types of bad news. We don't want to just take every bad news out there. We'll go over that just a little bit. We're looking for a temporary sell-off bounce, right? We're also looking for a larger recovery. It's situational. So it's going to depend on, what the bad news was. Like let's say it's a biotech. Well, and they got a CRL from the FDA. Well, if that's their only drug that they have, well, that one may not be such a great play because maybe it deserves to be down, wherever it goes. Same thing with earnings. I'm not real big on playing bad news on earnings because that's really core to the company. So maybe it doesn't bounce unless you see an obvious overreaction. If it was just a small miss and traders really overreact on it, that's certainly up to you. But I typically don't play those other than for a lottery play. I typically don't play those ER bad news or ER misses. So what I'm looking for, like I said, is I'm looking for a trader overreaction on bad news that is likely to be temporary, right? So the news is going to be temporary, and we'll go over a couple of those. So also you want to take a look at is the sector that particular stock is in, is that sector over, down with the overall market, right? So maybe it might see some recovery even otherwise if that particular sector is down. So what I really like to look for, the types of bad news for these bad news bouncers, I like to look for nasty grams, and I'll give you, I think we had one or two examples in the ones that I'll share with you today. A nasty gram, it's a bearish report. Basically what happened with SAVA, SAVA, when those bearish reports came out that, somebody said that they were manipulating data and things like that. Well, maybe they are, maybe they aren't, right? But we definitely saw a lot of opportunities on SAVA once that bearish report came out. Of course, it did tank way down, and it's been, pretty much seesawing ever since. But pretty much on a daily basis there for a while after that nastygram hit, there was opportunities, and there's still opportunities on SAVA. So that's a good example of nastygrams, and we're going to go over some more specific examples here shortly. So on those nastygrams, you want to make sure and read that bearish report. Check it out just to see what the allegations are, and maybe do some homework to see if the allegations are justified, or or if we think, well, maybe this company or their affiliate, whatever, may just have a short position. So they're looking to make money by putting out some nastygram. And how strong is the stock otherwise? Like with Saba, when they put out that manipulated data, do they have other drugs in the pipeline that are a big deal, right? Those are certain things that you want to look at on those nasty grams. I personally also like to look at biotech bad news because of my medical background. I can understand it more than your average person who maybe hasn't had much medical experience. So I tend to like those bad news bouncers because I can read into that data and see how serious it is. Some of it's over my head, but I also understand some of it as well. So one of the ones that I definitely like is the biotech bad news, depending on what the news is, of course. So one of the things that we want to identify, obviously, with these bad news bouncers is where's the bottom, right? Well, this just goes back to just regular trading, what we've had sessions on before. It's very difficult to predict, what the bottom's going to be, but there are things that we can look for as signs of a reversal or as signs of maybe a temporary bounce. And keep in mind, big difference between reversal and bounce, right? So, a bounce could very well be temporary. It could be just shorts covering their position or buyers coming in down there thinking that's a good entry level, and then it comes right back down. Happens all the time. Oftentimes what we see with these bad news bouncers is that after the initial tank, which oftentimes is pre-market or after hours, right? That's when, the news usually hits, unless it's an histogram, and then that can hit, intraday. But if it's a regular PR, then, those are going to hit after hours or pre-market. Well, when the bell rings, we can oftentimes see some more sell-off. Some traders that don't trade pre-market, they don't trade after hours, they're looking to they're panicking a little bit, they're looking to hop out of their position. So be conscious if you grabbed it after hours or you grabbed it pre-market thinking that it's that you're seeing some kind of bounce or a reversal. Be cautious at the opening bell. Also, what I've noticed with bad news bouncers is, for whatever reason, we tend to see a little bit more, not on all of them, but on some of them, something to just be watchful for. We tend to see a little bit more sell-off in the afternoon as well. Maybe people were playing it through the day, playing the bounce during the day, but they're a little bit leery about holding it overnight. So we'll see some people exiting their positions in the afternoon. So keep that in mind. So the things that we want to look for on these bounces, like I said a few minutes ago, just goes back to our normal trading, like we would trade anything else, looking for a reversal or looking for a bounce. You want to look at volume, you want to look at your candle formations, you want to look at volatility, you want to look at RSI divergence. I wouldn't focus too much on RSI itself because depending on how bad the news is, RSI can get pretty darn low and stay low. There's many stocks that I've seen that, RSI is less than 20, and it stays less than 20 for months. So don't focus solely on RSI unless that's your thing and you really know how to read RSI. But RSI divergence is something that you definitely want to focus on because that can signal at least some kind of bounce. Are we getting down to a major support level? Maybe it might be that we broke through the 52-week low, but maybe this stock, 3 years ago or 4 years ago, whatever, was trading in that range, and we may have some old support there. So keep an eye on support levels. A lot of these bad news bouncers do end up making a new 52-week low. We're looking for also some consolidation, right? So what does that tell us whenever it starts, whenever it's selling off really hard and then it starts consolidating? Well, that tells us that the sellers are kind of out of energy there. Now there's not as many sellers pushing it down. So at that point, once we start seeing consolidation, then we can start possibly looking at other signals that this could be a possible bounce incoming. Those sellers are definitely slowing down. So are we still making lower lows? Or are we now making higher pivot highs and higher pivot lows, right? So, what I typically like to do is whenever I think that I've identified, okay, I think we're going to have at least a temporary bounce here and maybe even a reversal, that I'll typically enter a starter position. I usually, with these bad news bouncers, I usually don't go full position right off the bat because oftentimes it can get a little bit cheaper. So I'll typically enter with a starter, and then because you can always add as it's going up. And then if you need to, if you still have conviction in the trade, if it makes another low, then you can add some more to your position. And we all know how that works, so I'm not going to explain all that. So I just think that that's a good idea because I have seen some folks that enter full position right off the bat, and then it goes down a little bit more, and now they don't really have any more room to average down, and they end up just exiting the trade, with a loss. So make sure if you're gonna enter a full position, make sure that you have pretty good confirmation that we're already on that recovery range. We're making higher lows, we're making higher pivot highs, higher pivot lows. Okay, let's go over some examples. CCXI is a pretty good example. So that was in May of 2021, May of last year. The news on the CCXI, I have it up here on the screen. On CCXI was that the FDA advisory committee reached a split decision on the efficacy of their drug. So it was trading, as you can see here, right in the $40 area. And then after the news, it went down all the way to the 17s on that day, right? And then the following day, it had a bounce, a temporary bounce there at that 17 level, and then it tanked on back down, made another low. But I mean, look at this on the very same day. Look at that bounce here. So it hit a low on that same day of, what was that? 1720, and then it closed that same day at 2663. I mean, that's a lot of opportunity, right? So, and then it ended up going back down again, made another new 52-week low down here at 953, and then just has kind of been ticking on up since then. So that's one example there. Let's see. Let's look at another one here. It's CRTX. And CRTX, what it had is their Alzheimer's drug. This was in October of last year. Most of these are fairly recent. But this was October of last year. Their Alzheimer's drug failed to meet its main goals, and it tanked down from $60. Let me get over here where we can see this was in October. Get rid of that. So right here. So here's your gap right here. So it tanked down from like $60 area all the way down to 1329, I think it was. Yeah, 1329. And that happened on the same day. So 4 days later, so 4 trading days later, we're back up to 1868. So there's another one that went from basically $13 to $18. So it eventually got some more bad news in January, a couple months ago, and it's currently trading around $4. But what an opportunity, from $13 to $18. And obviously we can't pick the low and we can't pick the high, but we could meet, we could get some piece of the pie in there of that $5 move. Okay, the next one we'll take a look at is ADGI. I think everybody will remember this one. This one, it had a pretty good recovery really fast. So this one was in December of last year, and you can see the gap down here. So basically the news on that one was that their antibody therapy was less effective against the Omicron variant than they thought, than they previously reported. And before the news, it was trading around $30, as you can see. And it had a high of $78 just prior to that, just a couple of weeks prior to that. It initially saw a low of $694 and bounced 2 days later to $17.10. I'm sure everybody in the channel remembers that that big bounce that it had 2 days in a row. And you can see those bounces right here. I mean, it was just crazy. So more opportunities there, $6.94. So it went from $7 to $17 bucks. I mean, that's a $10 move. I mean, that's huge, right? And keep in mind, most of these traders, you know, they're when they see these bad news bouncers, they're like, man, I'm glad I wasn't in that one. You know, and then they go on about their business, right? Man, there's a lot of opportunities here. So, okay, next one we'll take a look at is DCPH. And again, I think this is where we started with the channel. I think DCPH is in that Bad News Bouncers channel. So this was in November of last year, and the news was that they didn't meet their primary endpoint on their phase 3 drug. So before the news, it was trading in the $30 range, right at 30s, and it saw a low of 870 that day. And that day, it also bounced back up to 1033. No, I'm sorry. It saw a low of 870 and then bounced back up to 1033 on the following day, which was this green candle here. You blow this up a tad so you guys can see a little bit better. Oh, that's too much. We're going to have to go back. Okay, because I want to show you guys the gaps. And, you know, that's what a lot of traders are also looking for. Is they're looking for us to get back up in that gap, right, where we don't have any necessarily any resistance levels, right? We have organic resistance levels, of course, but that's, you know, what those traders that they're talking about. Well, hey, we're in the gap, right? I just wanted to point that out. Okay, and so it did end up reaching a high of 1145 in January before it started trickling back down. So again, you know, from 870 to 1033, and it actually, if you still had conviction in it, if you held it for a little bit longer, you saw a high of 1145. Okay, let's look at RDUS. We'll go over the news on that one. So RDUS was December of last year. It's another one that didn't meet the primary endpoint, biotech obviously, and it tanked down from 15 bucks. Right here's the gap. So the $15 area, and it eventually made a low of 593. I guess it's 592. And then it popped back up to about 9 bucks after the reversal. So you can see here, and it's still trading in the $8 range now. So saw that low of 592 and pop back up over some time, and now it's back in the $8. So basically another at least, you know, a couple of dollar move there on that one. All right, let's look at NVEI. This one was a very special opportunity. It was a pretty unique opportunity. So this was also in December of last year, and it got a nasty gram from Spruce Point Capital Management. And like I said, it was a very unique opportunity, and I pointed this out to everybody in the Discord that day. I said, hey, watch this one really closely, because what happened is right after that nasty gram hit, Citron Research came out with it, or they tweeted that they're bullish on the stock, that they're buying NVEI as it's way oversold. And they said some things like, you know, they had 92% growth in 2021, and it was way oversold. And they just basically, right after that nasty gram came out from Spruce Point, Citron came out with a bullish tweet. And I mentioned to everyone, and if you look at what it did here, so it came down and hit a low of 43.10 and closed on the same day at 58 bucks, basically, 57.97. So from 43 to 58, I mean, that's a heck of a move, right? So another really good example of one, especially after that bullish tweet came out. You know, and also their tweet also attacked some of the allegations that Spruce Point made. There was a lot of allegations that they made, and basically, you know, Citron said, hey, big deal, you know, so what kind of thing. So anyway, then after that day, after the $43 low, and it bounced back up to almost 58 bucks, it started, it ended up reaching a high of 66, which I think is here. No, I'm sorry. It ended up reaching a high of 71, okay, before it started trickling back down. So if you were to catch anywhere near the bottom, let's say, you know, you caught 50 bucks and then it went back up to 71, I mean, that's a heck of a move, right? Okay, let's look at blue. That's another one. Okay, so blue was also in December of last year. The news was an FDA partial clinical hold. And this is when it happened was that December? Okay, well maybe it was November. No, that's a different one. So this is a whole different bad news that it had here. So the one we're looking at is in December. It was right here, this one. Okay, so what happened here was this bad news came out. This is a whole nother one. I didn't even look at it. So if you guys want to check out what the bad news was on that one, you certainly can. But the bad news I was looking at was on 12/20. And it came out that the FDA put a partial clinical hold. It tanked down from basically the 10s and all the way down to 812. And it made a same-day recovery back over 10 and then hit a high of 1159 the following day, right here. So it doesn't look like there was a big bad nasty move down here, but there was. So you guys can check the news, and you look, if you dial into a little bit closer time frame chart, you'll be able to see that basically this one tanked down on the partial clinical hold, and then immediately the same day went right back up. So this is an example of one of the ones that recovered very quickly. All right, the next one is, I'm just going to give you guys just a handful more examples because I could sit here all day and do these. There's so many of them. I could go back in time at some ones that we played way before. But this is another one. BLUE, this was also December of last year. No, I'm sorry, ALDX. ALDX was also December of last year. It's another primary endpoint not met, biotech. It tanked down from the 7s area here all the way down to $3.40. And the following day, it started making a recovery. 4 days later, it hit $4.47 before trickling back down. So that's a little bit smaller of a move, but it was still $1 total. So maybe you could have caught, 40, 50 cents, 70 cents, whatever you could have caught on that one. I just wanted to show you an example of one that did make some recovery, but wasn't such a phenomenal move. And that's why you would want to check out what kind of effect that particular news was going to have on the company. Was this their only drug, right? Or do they have two drugs, but this was their main drug? This is the one everybody's excited about and everybody's counting on. Okay, let's look at BBIO. This was another pretty good one. So BBIO was in December of last year as well. Another one that didn't meet the primary endpoint. It tanked down from around $40, as you can see here, all the way down to, let's see, what did it get to down here? To $11.20 here on this candle was a low. Pretty big tank there. It started recovering the very next day and reached a high of $18.13 about a week later, right here. So there's another one that moved from, we'll call it $11 to $18. It's a $7 move. That's pretty substantial. Let's take a look at, see, I have, I think, 3 more. Let's see, MFIN. So MFIN, the SEC charged MFIN over an alleged scheme. I don't remember what the specifics were. I remember one bad news bouncer where the owner and his brother were doing some sketchy stuff. I don't remember if this was that one or not, but I don't have any more information on it than basically what I remember here. So basically, the SEC charged them with some kind of alleged scheme, and it tanked down from the $8 level to the 8s to around $3.50 on the same exact day right here, and ended up closing on that day at $6.67. Right, so it tanked all the way down into $3.50, and look at where it closed. I mean, right back up there. Basically, a same-day recovery, and it eventually made a full recovery and closed just Friday, 2 days ago, at $8.54. Right, so it went down to $3.50, and the very next day it hit a high of $7.33, and you can see what it's been doing since. After that nasty tank, that's a great opportunity, right? A $5 move basically. Okay, 2 more here. It's DNLI. We'll take a look at it. Go over the news real quick. So DNLI was January of this year. The FDA placed a clinical hold on their Alzheimer's treatment. You can see right here is where it gapped down. And it basically gapped down from the 40s here all the way down to 30.25. And it started recovering that same day. And that day it closed back at 33.86. So over $3 move there. And eventually hit a high of 38.54, which was right here, I believe, yeah, on this day here. Ended up hitting 38.54. So depending on how long you wanted to hold it, another one. That's an $8 move. I mean, that's huge. Okay, last one here. That one nope, that's all I have. So, like I said, I could keep going with some examples, but I think you guys get the point that, don't just discount these bad news bouncers. There are opportunities there. And like I said before, most traders are just going to, go, phew, man, I'm glad I wasn't in that stock. And then, they just ignore it. But there are some real opportunities to be had on these bad news bouncers, as you can see. And certainly, go back and do your own testing on them and, see what you think, see how you would have taken the trade. Look at some other tickers that maybe that had bad news, and see what the recovery was, if at all. But the whole point of this session is to let you guys know that the different types of news to focus on, and maybe you have some kind of specialty in some area that you may want to focus on that group of bad news bouncers, because you know a lot about that particular topic. So maybe that's what you want to do. But the whole point is don't ignore them, because there are a lot of opportunities on these bounces, and sometimes they're just a temporary bounce, but that's okay. Whenever we're playing day trades, that's what we're oftentimes looking for is is bounces. And sometimes when they'll bounce temporary, and sometimes they'll have a huge 100% recovery all the way back to where they tanked down from. So keep an eye on those. I'm going to stop the recording now, and we're going to answer some questions from you guys.